Bank of America have picked 9 longs and 1 short as their best ideas for trading in Q3. And I'm going to cover that in this video. So guys, smash that like button and subscribe if you're new. You're watching More Money. Let's get it. What's up guys, and welcome back to the channel where the goal here is to help at least 1,000 people achieve financial independence. And let's dive right into this one because I love when sort of research houses put out sort of like their best opportunities for the next quarter. It's very interesting, and I always like to size up sort of like how I'm thinking of the industry or investments relative to sort of like how the analysts are thinking. And so Bank of America has picked 9 longs and 1 short for their best idea for the third quarter, which they do believe is expected to be a volatile market. Bank of America economists are looking for a terminal Fed rate of approximately 3.25 to 3.5% this year. So they expect headwinds, which will impact the shares that they're recommending. Now, I personally do see further rate increases, but I don't think that we're going to get as high as greater than 3% this year. I think the Fed pulls back. Now, this list that they've provided represents their fundamental equity analysts' highest conviction ideas for the third quarter. Now, you guys may remember, as I've sort of explained on this call before, I actually have worked on Wall Street in sort of this industry. Like I was in equity research, and I've written these lists before. They ask every industry analyst for their highest conviction item. So you'll have names on this list from overpriced industries because that's just the industry that the particular analyst covers. So you have to sort of like take that into account when you see these lists. And so you can see on their list, they have EPAM Systems, Exelon, Kroger as sort of like their 3 of their top 10 opportunities. Now, I don't have a model on any of these 3, so it's hard for me to opine on it. I would probably say that Kroger is probably a good name. However, I just don't understand the valuation of it because I just haven't dug into it. One name that I understand really well is Meta. That's their number 4. Obviously, they have number 5 there, which is Pfizer. But just going into number 4, I think it's very interesting what they're calling out. So they're saying that Meta has enough investment spending. They actually have recently been reducing their investment spending. But here's a very weird call out. They believe that Meta has bonus accrual flexibility, which could enable the company to grow earnings in a moderate recession scenario. I think that's a very weird call out. And the reason why I think that's a weird call out is because every company has a bonus accrual. I've never been at a company where we haven't had a bonus accrual. The problem is, though, when you start reducing that bonus payout, so you say, listen, we're going to accrue at 100%, but then we're going to pay out at 50%, you start losing your best people for that. So be very careful when you start calling out bonus accruals. The best way to go under on your bonus accrual is book the bonus accrual at 100% employment, and then before the end of the year, hope that there's sort of attrition that's enabling you to underpay on that 100% accrual amount. So that's what they might be saying, but I would say that it's a very risky proposition if you're just going to bonus at 50%. If you ever have seen sort of like investment bank exoduses, even if they pay around like 60% to 70% of the bonus for sort of like investment bank analysts, associates on the research side or wherever, you'll see a mass exodus of the investment bank because people will just leave because the majority of their income is coming from bonus. At companies like Meta, where you have these highly sought after engineers, you'll see them getting bonused at 40% of their base. And so if they lose half of that bonus, it's pretty substantial. So they may potentially be looking for greener pastures. So I wouldn't say you have bonus accrual flexibility from the perspective that you can reduce people's bonuses, because the way people generally think about them is they just think about them like it's salary. And so they really think about it as a loss, even in a recessionary environment where they're highly sought after and they can go to greener pastures. So that's why I think it's a little bit of a weird call out. Now, just looking at the free cash flow per share valuation of Meta, you can see that it's 17.5 times earnings, which is a low multiple from my perspective. I believe that the company is trading at a big discount at approximately 65% of its intrinsic value. Now, moving on to the back half of Bank of America's list, you can see that they have Progressive here, they have Schwab, they have Thermo Fisher, they have T-Mobile, and they have AutoZone. Now, I have valuation models on Progressive and AutoZone, and I just wanted to talk about those a little bit more. So they are saying that Progressive will be the primary beneficiary of a market shift, and they offer the best price. That makes sense. However, be careful with Progressive. And I've been warning the Patreons with Progressive. As much as I love the company, they are facing higher pressures with repairs, which could be throwing off profitability and pushing up that combined ratio. And here's what I mean. Auto insurers' rates are rising, but insurers could get squeezed by higher costs ahead. You can see that the premium increases are just kind of offsetting the higher repair costs, but I don't think that they're fully offsetting them. So these auto insurers are facing higher cost challenges, which I believe could actually put pressure on that combined ratio and bring profitability lower. And so when you think about the Progressive Corporation, understand that that December 2022 EPS estimate is pressured lower because I do believe that analysts are expecting bottom line pressure in 2022. So when you value Progressive, I think you sort of have to value them on a 2023 basis. And so they're trading at approximately 19 times 2023 earnings. I don't think that that's low. I think 19 times earnings is somewhat in the fairly valued to somewhat overvalued area. Now, what do I think their valuation is? Well, you can see here that my EPS estimate for fiscal year 2022 is roughly in line with the analyst consensus. I'm thinking that they're going to make around $4.50 a share. Notice that how that comes under 2021's EPS of $5.7 per share. And even the analysts are expecting that EPS to come down. So be very careful with Progressive because even the analysts are expecting pain on the horizon. Now, with a high multiple in 2022, which reflects the fact that 2022's earnings are sort of strained, and really what it actually represents is a 15 times or 14 and a half times 2023 multiple, which is in line with their historical multiple of 15 times earnings. You're seeing that I'm valuing the company at $90 per share. The current share price is $120 per share, or $117 per share. So the current share price as a percentage of the valuation is 130%. So that doesn't seem sort of undervalued from my perspective. Now, moving on to AutoZone, you can see that they're calling out the fact that AutoZone's higher exposure to lower income consumers than peers presents an outsized risk to AutoZone sales, which I think is a little bit weird. I don't know if that's the real risk here. Here's my real risk. I'll go into it. Now, first, I do want to say that I absolutely love AutoZone because it's a company that Amazon cannot compete against. And the problem I see is that because Amazon has not been able to compete against them, I do believe that the analyst community has sort of picked up on that, but it's been a bit expensive from a share price to me for a while. And so that high valuation, you would expect high levels of growth for AutoZone. Well, that's not really what we're seeing. You can see that although they are growing or expanding, I'm saying expensing, but expanding internationally, the top line growth is only expected to grow in the mid-single digits. So you can see that I'm saying that Mexico is going to be growing at that mid-6% rate, and Brazil is going to be growing at that mid-single digits, or sorry, 15%, so mid-double digits, I'd say. But overall, the company is still growing at around 6 to 7% a year. So what does that mean for the valuation? And so when it comes to the valuation of AutoZone, you can see that the discounted EPS plus the terminal value less the excess capital, I'm valuing the company at approximately $1,500 per share. And that's using a terminal multiple of 15 times earnings. So that's a really good terminal multiple as well. But the current share price is $2,000 per share. So they're trading at approximately 140% of their intrinsic value. And so I would say that the current share price is slightly richer than what I'd be willing to pay for this company. I'm a buyer sub $750 per share. So the share price has a long way to go before it hits that rate. And so I would, by definition, agree with the Bank of America that this is a short opportunity. And I would say that all of the opportunities presented by Bank of America are not sort of like opportunities that I've been following closely, but there are some very interesting opportunities in this market that I have been following. This is a tracker that the Patreons get access to, and I believe that there's much better opportunities that I'm seeing. So I believe that there's 10 names trading under 50% of their intrinsic value, and there's 20 names that are trading between 50 and 75% of their intrinsic value. And you can see here that Alibaba and Best Buy are two names that are trading under 50% of their intrinsic value. And then in that 50 to 75%, you see you have Zillow, Alphabet, HP, Meta, Dave & Buster's, and Canada Goose. And of course, you can see that some value investors, like legendary value investors, agree with me on some of these names, because you can see some guys going into Alphabet. You obviously saw Buffett go into HP. You see Michael Burry going into Meta. So you're seeing some agreement on these names. All of these names listed on this tracker come with a fully detailed model supporting that valuation, which you can click into when you click into that ticker. So you can see that the ticker is actually highlighted blue because you can actually click into that model. So how do you get access to all of that? Well, you can get access to all of that at the lower tier of the Patreon. And like I always say, if you want access to a live presentation that has an epic amount of research that's reserved for those upper tier Patreons, you can join us at that upper tier. And like I always say, there's never any risk to you, because if you decide that it's not for you, no problem, let me know and I'll fully refund your first month's subscription so that there's no cash cost to you, so zero risk. Now, I did mention Meta and Michael Burry when I talked about that list. Now, I actually put out a video recently on how Michael Burry is using Meta as sort of his stagflation proof opportunity, and you can have access to that video right here.